Good morning, everybody. Sorry, we were having some technical difficulties here with YouTube. So let's just jump right onto the charts. So today is non-farm payroll. So we will be avoiding the indices. We're taking a look at NAS just to see it play out, but this is one of the days that we do not trade the indices. Even Wednesday, like pretty much the rest of the week, Thursday, Friday, we'll keep an eye on it, but we're not really interested. The probabilities are decreased. Instead, what we will look at is Aussie New Zealand here on the left, a Forex pair. Ticker AUD, NZD. So we've already got a confirmation. Now we're just waiting for a retracement. So we have a upside expansion model. London gave us a bullish confirmation, but since we already had a early retracement after the range was formed, we knew that after the bullish confirmation, it was only going to be a short retracement back to the possibly the top of the range in the first fair value gap. Tapped the 20, and it took off. So this is a new feature we're testing, and we will be adding to the indicator. This lets you know, it's a multi-time frame sensor that lets you know all the EMAs. It's to help you figure out the daily bias. A lot of people have been asking about that. So instead of scouring all these different time frames and seeing where the market is at, you can just look at this now and you can tell. On the daily, we're down, and this is all based off of the EMAs. So on the daily, we're down, but we're up across 4 hour, 1 hour, 30, 15, 5, 1. So anytime you want to take a counter trend trade, now in order to have it be a high probability counter trend trade, we just need to see the first 3 time frames are in the direction of that counter trend. And obviously you want to mix it and add it with the rest of the strategy. You want to make sure you have a green box, a green confirmation. So right now, even though the daily is down, we're bearish on the daily, we are bullish across the rest of it. And we'll let you know specific details of when we're going to be adding that indicator, or adding that to the indicator, I should say. So right now this is the fair value gap of interest, but the 20 is already pushed past it. Now we do have a small fair value gap here. I want to see how the market does in this zone. Usually we take a look at oil on these heavy news days, but today is crude oil inventories as well. So that's going to fluctuate the oil market. Let's drop a fib. So I'll see what kind of retracement we get. And going forward, as mentioned, with the counter trend trades, you just need to see the first 3 time frames are lined up in your favor. So if we're looking for a bullish counter trend on a bearish day, we want to make sure that these 3 are at least matched up, and vice versa. So we have NAS here on the right, just taking a look at it. As you can see, it's pretty much been consolidating all morning. Asia had a bullish confirmation, a short retracement, short extension. London had a bearish confirmation, retracement. It was still a true day because we did not break the other side of the range, but it didn't do anything. It broke the range right after the session ended. And now you have a bullish confirmation. But again, we're not interested in trading the indices. We're just taking a look. Aussie New Zealand slowly retracing back to that fair value gap of interest. We got the 20 EMA right under. We would like to see a deeper retracement if it comes back down to this fair value gap, because we're at least sitting in the 50, the midpoint of the range, the dealing range. And we have the opening gap down here in red. But if it just bounces off this and takes off, which it could, because again, on the short term, it is very bullish. But we would like to see it at least hit this 20. Now back here, it wicked and touched this 20, but that was before the range was fully formed. For a early retracement, we like to see the range be fully formed and then it retrace back down to the 20. So we didn't get that. So now we're waiting for it to hit here, possibly this fair value gap, and then we'll take a look on a smaller time frame to see what's happening. And for anybody joining us late, again, our apologies. We were having some technical difficulties with YouTube. So if anybody's following along with us, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we're getting some reaction off that fair value gap. But until it hits this 20, we're not interested. Remember, the higher probability trades happen when we get closer to the EMAs. We have NAS here on the right, just watching it. No interest in trading it. Put 9 minutes away from 11. Getting a big wick there. Let's see if it just pushes down. Starting the retracement. I'd almost like to see it get at least halfway through this wick. That's a big wick. But we'll see what happens once it hits the 20. Anybody joining us late, we're looking at Aussie New Zealand, ticker AUD-NZD on the left. We're not interested in trading the indices today, as today is non-farm payroll. This entire rest of the week will be chaotic. The market makers use this week as a smokescreen to reprice the market. So we want to be careful, proceed with caution. We're only looking for high probability trades. That's why we're not looking at crude oil either. Today is crude oil inventories. That's going to shake up that market as well, not to mention all the stuff happening in the news overseas. Slowly getting a retracement. Now back to that 20 EMA. Seven minutes away from 11. Where we're looking for everything over 70%. 70% or higher probability. There are a lot of people that see this reaction in this fair value gap and they jump in, and again, it could shoot off from here, but doesn't mean it's a high probability trade. Higher probability trades happen the closer we get to the EMAs. And right now we are green. So we have 1 minute, 5 minute, 15, 30, 1 hour, and 4 hour. We are bullish. Only on the daily are we bearish. So if we're doing a counter trend trade, usually when you see the 4 hour is bullish and only the daily is bearish, I should say with an asset like Aussie New Zealand, these two currency pairs are very close together, as are the countries. So you'll see, if I zoomed out here, I'll try to do it really quickly, even on the daily. This pair, all it really does is kind of just gesticulate back and forth in a range. It'll always just keep going up and down in the same range. So when you see the daily is bearish or bullish, if the rest of this is green, then you can trust that the majority of it will be pushing up. And even the daily cross might happen eventually. This would be the daily targets up here and daily liquidity up here. Let's jump back down to the 5 minute. Very close to that 20 EMA now. So we'll make an announcement of when this new feature to the indicator will drop. We're still deciding if we want to keep it as two separate indicators or if we want to just attach it all to one. Make it color by numbers. When you see a green, 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 it just adds to the confluence. Higher time frame, bullish. That way you don't have to jump across all these time frames to see where the market is sitting. You could just take a glance up here and you'll know. Getting close to the 20 now. Let's see if it wicks past the 20 into this fair value gap, which is sitting at 50% of the fib. This would be a more higher probability if it dipped right down here, bounced off the 50 EMA, touched the New York opening gap, and then shot off from there, but we'll see. Still a little short of 20. Anytime you're wondering what asset we're looking at, just look in the top left corner, time frames. Getting some reaction again off that fair value gap, but just a little short of that 20. Could take off from here. That's fine. But I want to see at least tap this. Otherwise, We're still extremely bullish. This would be like trying to jump onto a moving train. It's not giving us a good entry here. Here we can at least slow it down, see if it dips below 50. Remember, wait for the market to come to you. If it doesn't come down here, then it never pulled into our station, so you can't feel bad. Also keep in mind that the 20 EMA, or all the EMAs, are dynamic. They're constantly moving, as you just saw it push up here. But that's not the kind of tap we're looking for. I want to see the market come down and tap it. If it leaves without us, it leaves without us, but this was way too bullish to jump in. Somebody could have jumped in here, and then where would your stop have been? Your stop would have had to have been right here at the low, and the market could have easily swept that, tapped the 50, hit the New York and jumped up. We want to see it come down here, take out this low, or at least touch this 20 and have some reaction here first. And this is another sign when you see all these green up here, or at least the majority of them green, this market might move fast. We've already taken the highs. Just turning on our standard deviations. So we're already at 0.5 standard deviations. Now we could get another retracement here. But that's not a true tap. The market pushed up and dragged the EMA up. We never actually saw it touch the 20. Right now on a smaller time frame, it's just leaving breakaway gaps. So there has been no retracement, which means there's been no entry points. This fair value gap that I painted, that would be the first. Two minutes, 52 seconds left in this candle. Let's see if it leaves a fair value gap here. We're close to 1 standard deviation. That's usually our low-hanging fruit target. So hopefully we get a retracement before it hits here. Otherwise this market might just take off without us. Sometimes it's that quick. Sometimes while we're waiting, we're waiting. If you think about it. We were down here. It was only just a few pips. from our entry. So if the market retraces back here, we can take a look. We got to also move up our fib levels. Interested to see what it does here, with our target being 1 standard deviation. Let's move that over so you can actually see that. The indicator already paints these out for you. I just wanted to make it look a little bit more obvious here. For anybody joining us late, our apologies. Again, we were having some technical difficulties with YouTube. Aussie New Zealand here on the left on the 5-minute. Getting that rejection now. Now let's see it come back down into this fair value gap. Maybe even wick low enough to hit that 20. 39 seconds left. So we closed off that fair value gap that was forming. Trying to make this as easy as possible for people to understand and read. Color by numbers. You got a green box, green confirmation. You're green across the board now, letting you know that you're on a smaller time frame, all the way up to 4 hour. Actually, you're very bullish. Just increases our probabilities. So now that lows, or sorry, high has been taken, we can take that off. I want to see what it does in this fair value gap. We did sweep this liquidity, which again we usually don't do. First, we like to see the retracement, then we take out the confirmation. But here we took it out first. So we're going to be very careful on our entry, otherwise it might have just been a liquidity run, and then it could push down. And it could go as low as this fair value gap here, which is now sitting between 50 and 61%. So we're just going to wait and watch. Let's move this over. We're just watching NAS on the right, but we're not interested in it. Today is non-farm payroll. Kind of day that'll beat you up if you don't know what you're doing. Definitely not for beginners. It's actually one of the days we avoid. It's a low probability day. It's used as a smokescreen for the market makers to reprice the markets. Still getting some gesticulation here. But this is the first fair value gap on a lower time frame that we'd be interested in. Just patiently watching. We're at 11:06 now. Our goal is to be in a high probability trade within the next 25 minutes. Market slowly coming down to that fair value gap. Entering it now. Now we're going to watch on a lower time frame to see what kind of reaction we get. Go to whatever asset you're looking at. Make sure you're looking at it on a 15-minute, 5-minute, 1-minute. Not liking the way these lows look here. Wondering if it wants to take one more swipe down here, tap that 20, take out these lows, and push up or even push a little further down. That's why we're being very careful with how we proceed. On a smaller time frame, no candle has yet closed outside this fair value gap. Still just waiting. I think we're going to get a little bit of a deeper retracement, take out those lows. Right here. Still haven't technically hit that 20. Still just waiting. 11:09. I think we're close here, but I want to see some more push. Most likely to the downside. I want to see that 20 hit. I see it tap this, sweep this. Candle body close above this. Come on down. Just mark out these lows. We're extremely bullish. You just want to tap here, get some reaction. This candle closes green, then we'd be interested. We're too close to these lows. Haven't touched the 20. 2 minutes, 3 minutes left, sorry. Yeah, until we take these lows out, I'm not interested. So I want to see it hit this 20, take out these lows, and I want to see where this candle body closes. About 15 minutes left. Hopefully it gives us a high probability trade setup soon. It's too close to that 20 and too close to these lows to not at least do one sweep. Here we go. 20 EMA. Sometimes you got to zoom in all the way. I want to see this low swept. Okay, it touched our 20. Now let's see if it takes out these lows. Come on down. Only a few pips away now. And right at the lows. Still haven't swept them yet. Remember, sweep means we go right under. There you go. So we just swept these lows. We've touched the 20. Now I want to see a push to the upside. I want to see some green candles being formed on the lower time frame. Otherwise, this thing could push down even further. And this is why we wait. The market could just push up from here. We'll see. On a smaller time frame, I want to see green candles pushing up, creating fair value gaps. Four minutes left in this candle. Could just draw down, tap this fair value gap, hit this 50 and go up as well, but let's see what it gives us here. About 15 minutes left for us to jump into a trade. So we've swept all the lows here. There's some more lows sitting down here. Let's see if it wants to attempt to go after this low. Remember, for anybody who was jumping in here, this is where your stop loss would have been. For anybody who was trying to jump in on that fair value gap. So it only makes sense that they want to take out those stop losses here as well. At this fair value gap, 50, but we'll see. Now the focus is on the lower time frames. As you can see up here, we're still bullish across the board. We have a green bullish confirmation. We have a green box. Let's match up the colors. The only thing we don't have right now is we want to see some more green fair value gaps. We're getting some reaction there now. So on a smaller time frame, we are creating some fair value gaps. Let's see if they stick. This might be our point of interest. We'll know in the next 40 seconds. Otherwise, I might just cut through and keep continuing down. Let's see. "15 seconds. Okay, so this is now our fair value gap of interest. If the market comes back down here, we would be interested. Close to 50% on the fib. Just want to frame it up. Leaving a lot of breakaway gaps here. We're above the 20 now on the 1 minute. This is our fair value gap of interest. Make sure you watch the sessions in strategy and market dynamics video in the Learning Hub to understand exactly how we find our fair value gap of interest. The market will most likely turn around from here. Using this fair value gap. So we're interested in a potential entry here. We want to see the market retrace back into this zone, and then we'll see how it moves. We want to see it tap, close above this. Move this Fibonacci out of the way. Now keep in mind it's given us no entry yet.